Hey everyone, welcome to another episode of the Startup Voyage. And in this episode, we're going to be engaging in some discussions around Web3, which is coming back to life after a very long crypto winter. We'll be talking about some insights from two experts in the field, Ruth Galvin and Jasper Demare, both from Outlier Ventures. Now, Ruth provides a detailed analysis. I guess she can provide that to us, to the audience, of the current funding landscape, which I think has changed. We'll talk about that, how hard or what the challenges are in raising money for Web3 projects, and then considerations for founders and strategic competitive positioning for these projects to successfully get funded. Now, with Jasper, he's a researcher for Outlier Ventures, and he's done a really nice piece around real world assets, which has come back to life. Once again, we will talk about that, the different frameworks that are being developed to support real world assets, and we'll look at some in-depth exploration into cutting-edge trends and innovations in the space. So this episode is going to get started. Welcome both of you to the podcast.
Thanks, Arthur. Great to be here.
Great.
Hey, Arthur.
So I guess,
Thanks
yeah, no worries. So maybe you guys can maybe just give your general impressions. It'd be interesting to understand your perspectives and how you see this year, 2024, shaping up. Of course, lots of new noise, lots of new narratives that are out there, mainly with the Bitcoin being like at 52 and the halving coming up is one of the biggest news for this year. So I can hear from each one of you. What do you think?
Yeah, happy to go first. I mean, looking back on 2023, I feel like 2023 was a big year in a number of ways. I mean, some big news events, looking at the fundraising landscape as well. Quite a lot happened. It was, I guess, what we might call a little bit of a crypto winter. So some of that, bear market. So quite a challenging time for builders over that period. Looking at, like you said, kind of what's happening in the fundraising landscape. I think when we look at Web3 fundraising, you kind of have to also keep into perspective, what's happening within the global VC landscape. And across the board, it was also quite a challenging time. I mean, the global VC market tumbled quite a bit in 2023, and VC investors are a lot more sparing with their dry powder and doubling down on the due diligence before they really invest in teams. So that also comes through in the Web3 funding. With that being said, within Outlier, we also saw it as being a time when we saw more builders actually coming into the space, more builders applying to the Accelerator programs. So they do say, a beer is a time for builders. And yeah, we definitely saw that. So I think to your question, looking to 2024, I feel like we're really seeing some positive signs within the Web3 fundraising landscape. VC investment has kind of ticked higher in the last quarter, and it feels like there's a definite mood shift. Positive sentiment around the Bitcoin ETF news. You mentioned the halving coming up as well in April, fundraising news picking up. So it feels like it's set to be I'm sure an interesting year, but more of the optimism that's also there.
Okay. Jasper, what are you seeing for this year?
We definitely echo what Ruth said. So I think 23 and 24 couldn't be more different. We're only 2 months in, right? It's just completely different. The Bitcoin is also like in 22, 23. I think all of Web3 builders were basically like licking their wounds, continue to build, which massive kudos because it's not that easy. And now I think in 24, as the landscape heats up, as general investors are coming back, they could just all of a sudden come out with a slew of headlines, high quality stuff, which they've been building out themselves for the past couple of years. So I think we actually see like a surprising amount of like exciting headlines simply because they, like in overall, like builders weren't fully convinced to share them out loud with the audience. So I think that's also a reason why we see like this sudden fraction excitement. Like all this news is coming out. There's a lot of verticals which we're excited about. So 2024 and hopefully like after that as well, like it's shaping up to be a very interesting one, I think.
Right. Well, Ruth, you're a Basecamp manager for the event, the Excel, and you just mentioned there's a lot of new projects coming on board. So you're mentioning that there's a lot of builders coming in. I guess are they infrastructure projects and like maybe PK zip or security type of layers? What are you seeing as, I guess, the trend? What's going on, or what are you guys looking at for 2024?
Yeah, so maybe it would be helpful if I, for also the audience that might not know so much about Ally Ventures, if I give a bit of an overview. We're the global leading Web3 accelerator and one of the most active Web3 investors by volume. So we see a lot, within the space and a lot of trends over that period. We've helped accelerate over 278 companies, and some of which have expanded to multi-billion-dollar economies, such as Fetch AI, Economy, Kudos. So yeah, we've seen a lot, over the bull and the bear. Within Outlier, we also run a number of these Basecamp accelerator programs. So kind of 12-week accelerator programs where we provide 360-degree support, connecting with ecosystem players, mentors, and really help founders grow their business and take it to the next level. So yes, we run different programs. Either we'll partner with protocols or run more thematic base camps like the AI base camp, the AI crypto base camp that I'll be leading, the real world assets base camp that Jasper wrote the thesis for. And when I look at it the past quarter, so last quarter, I was running the Walmart program. So we partnered with Walmart's incubation, and we saw kind of quarter on quarter, the number of startup applications had just been steadily increasing. So for that Walmart program, we had the most to date really of startup founders applying. So I think that's a really positive sign. But looking to 2024, AI will be one of the big programs, real world assets, and we've got some others that will be on the horizon. So definitely keep an eye and watch this space there.
Okay. Well, I think it's interesting when I go out into the crypto events, and when I talk to people about what's going on in the space. There's always a segmentation between people who are looking at it purely from an investment point of view, and others that actually are thinking about it from what's going to be next to actually solving a problem, or what's going to pick up some product market fit. So some of the narratives I just read, it's all over Twitter and all over everywhere, right, in the Web3 space. Of course, AI is still very big, especially with the amount of or the announcement of Sora. You can only imagine the amount of computing power, the GPUs that will be needed in the market. I mean, those stocks have just skyrocketed with NVIDIA and microcomputing. You've got DeepIn, ERC-404, BRC-20, real-world assets, as Jasper has already done his thesis on, modular L1s, and restaking. So these are some of the narratives, but then when I hear this, it's always like is there a project working on these so I can invest in them? But to me, they're more looking at it from a speculative point of view and wanting to, make some money off some project, right? But from Outliers Venture, what do you look at? I mean, you must also look at the narratives that are going out there. And I guess it's not so much that you guys are shopping around for projects. You're trying to pull them into the accelerator. Is that right? Is that how it works?
Yeah, that's right. So we do look at it from the investment lens because we invest into the startups, but the stage of the startups can vary. So they can be very early stage to later on, and really look at what is the potential of the team, of who are the founders, and are they solving a problem, or is there the desirability within the market that's going to be there. So definitely look at it from a few different lenses when we're deciding to invest in the team and bring them into the program. I think you mentioned some of the examples there. We had a team called Exabytes in our IPS program, and they're a decentralized compute platform, and they were doing really great. So they're an example that graduated just last year, of founders having really good what I call kind of the founder product fit. So right founders within the right product, and some of the teams like that we're really excited about and wanting to invest in more going forwards, particularly with the AI program and things like that.
Okay. Well, I think I've read some news about I guess year-on-year numbers on venture capital funding into the Web3 space, and it's a little bit lagging, of course, and it seems like it's increased, like slowly increased, even though about like single-digit numbers. But Jasper, I guess in real-world assets, like I was in this space when I moved towards the last crypto winter, I moved towards like security tokens, and I really thought that everything is going to go towards that space. I was working with licensed exchanges, tokenizing, I guess stocks, bonds, things like this. Very traditional product. In your research, I mean, what are you seeing as in 2024? What will come to light as a significant innovation for the support of RWAs and bringing it to market?
Yeah, no, definitely. I think for the people that spend close attention to the space, they're quite familiar with RWAs. Like they've seen it in 16, 17, like the narrative was quite hot with the likes of TradeLens, for example. Like then it was used in trades to track and trace for supply chains. We think they're structurally different now. There's a couple of reasons. I think first of all, it's the increase in mindshare where retail and founders are not the only ones that are actually excited about this. You have large corporates stepping in, and financials are leading the way, but they're closely followed by companies in supply chain, media companies, healthcare companies to use it for data, for example. So there's interest across different sectors. So, but obviously financials is leading the way. But what you need, and that's the big difference now, is you have asset holders that are actually interested in this, because that's the difficulty, right? Versus other sectors like, for example, gaming, where you just need a nice product and exciting users. You need asset holders to actively desire the creation of digital copy of their asset on chain, right? So this has changed. It's pretty big. I think the second one is the regulation. There's more regulatory clarity. While it doesn't necessarily seem that way for the listeners in the US, if you step outside of the US, there's more regulatory clarity. I think the big one, for example, is MiCA coming online at the end of this year in Europe. And then also like the UK is doing a lot with the FCA to get regulatory frameworks in place. And in Asia, obviously, like I feel like they're front running the regulation quite a bit. And then lastly, I would say the technology is in a better space. I think in terms of throughput, security, all these things which are very necessary for large corporates to have a higher degree of confidence in the integrity of technology has come online. Like you have L2 scaling, you have a lot of L1s, old L1s in dedicated RWA L1s, ecosystem development. They're all very exciting stuff, which will, I think, give us another go at RWA. And to your point, to what I mentioned earlier as well, is that we spend a lot of time like at the ground level of the ecosystem. So we spend a lot of time talking with founders, talking with builders, people who are generally just following the space very closely. And there is a lot of headlines coming out end of last year, the beginning of this year. It's an exciting space to look at, really. It's becoming more Web3, where previously I would say it was like 2.5. It was basically traditional industry using a new type of database. But now you see like the idea to decentralize these infrastructure platforms as well. So there's a lot of stuff falling in place quite quickly. So I wouldn't be surprised if obviously like the Bitcoin ETF helps. You see headlines from large institutional players as well. So this is all adding up and shaping up quite nicely for the cycle.
Well, do you see like then a separation in how people are coming up with innovations? Meaning, like you said, financial is leading the way. It has been, and it will probably continue with the Bitcoin ETF. And perhaps the next step would be thinking about how to tokenize private debt or equity, things like this, right? Because these are things that, if you've got BlackRock now involved in digital assets and supporting the space, they're most likely going to look at supporting what already exists and making that more efficient, I guess, to a global capital market. But then there's the other side of things of people looking at just simple efficiency around dematerialization, reducing intermediaries and reducing costs. So these are more on the very process driven level. So do you guys look at it from all different angles, I guess, or what do you see is going to be most important for 2024?
Yeah, it's a big part of our thesis actually, because we had a feeling that before we even started writing it or like looking at close at the ecosystem, obviously we followed it from close, but never to the extent we did. Now like we're very, very active. To us, like it felt that a lot of the headlines, like 99% of headlines, were all about financial assets. So we wanted to take a step back and look at the technology and its value proposition holistically across all industries. So we went back, we took a step back, and we asked ourselves, like, okay, what is the core value proposition of this technology, and where is the potential to be applied? Financial industry is just a very good fit, but I think other stuff we're very excited about is like supply chain tracking. There it already happens quite frequently, like carbon certificates, ESG tracking for sustainability reasons. That's also a big one. One that I'm very excited about personally is more on the intangible asset side. So I think data, like the tokenization of data and putting that on chain, and then also intellectual property and the way that gets created and distributed is going to be very big. It also has a very strong fit where you don't necessarily have the Oracle problem, which is the fact that your token needs to represent your physical assets, because these are already digital in nature. Data by definition is digital, and intellectual property for the past decades has been stored on databases anyway. So because they're already digital, it's an easier fit, right? I think there's going to be a lot that's going to happen around the intangible assets, and especially data. Like as you mentioned earlier, AI, Sora came out last week. Like there's just this insatiable demand for data points, and having the ability to store these in more transparent way on the blockchain, I think is very strong.
Okay. Well, this is a question for both of you then. I mean, I've been listening to a lot of different podcasts. Raul Paul, I listened to a lot of his futuristic thinking of like how AI is going to, really change people's lives and what type of jobs we'll have in a very, very short-term future. What do you guys think about AI and its real impact as far as the projects that you're seeing and how they're implementing it? We'll go through Ruth. Yeah.
Take a stab and then Jasper, feel free to jump in after. I mean, so something that's kind of outlined in the thesis is looking at, what are some of the structural issues within the internet today, and where can AI and Web3 technology be quite complementary. And when you look at how pervasive the internet is in our society, there's a lot of touch points. I think to your question, one aspect also within the thesis that feels quite relevant is looking at kind of the changes with the UX and the kind of the user experience, the UI, the UX, and how AI will bring in some of those new interfaces. Already, with the likes of ChatGPT and some of these front ends, you can see it's a different user experience. Rather than going to Google search, you go to ChatGPT and it surfaces the information just exactly what you need and some really good answers. If that's happening in the Web 2 side, I think the gap between the Web 3 user experience, if we don't incorporate AI, is also going to get bigger. So that's kind of one component, I suppose, that in the thesis, kind of dive into a little bit more. But Jess, I'll hand over to you as well to. You got any other thoughts?
I think it's a super interesting time actually, and to what Rick mentioned earlier, like there's a necessity for this to be happening as well. Like there is a necessity for Web3 to be very serious about AI and the capabilities, and ultimately like the user experience, like the expectations around the user experience that are changing rapidly, right? I think a very big one as well is if you just take a step back and you look at what has happened in the past decades, both technologies have been developed in silos because they were used by a very niche sub-segment of users, power users, researchers, and people who were just generally excited. Well, over the past, I think since GPT came online in November 22, that was really like the watershed moment. We've seen the diffusion of both technologies like steadily across society. Billions of users are adopting it. And with the adoption comes also the realization of the limitations of the technology. I think previously concerns around data privacy, data security for AI, and then for blockchain, it's around scalability, efficiency, and usability. Like the limitations there were poorly appreciated, but now that they fall into the average user's hands, which they're not power users, they don't have prerequisite knowledge, I think there is this necessity as well to solve the issues, because it is becoming like, if we rapidly adopt this technology, like we need solutions to data privacy, we need solutions to data security. And I feel like initially the debate was around regulation. So if you remember last year, like there were loads of Senate hearings of big tech CEOs coming in and basically like providing a lecture to legislators around what are the implications, how does technology work. But like, let's face it, like regulating this is extremely difficult. So rather than purely, I think, like obviously we are still of the view that you will need regulatory framework here, for sure, a supranational one. But alongside regulation, you have blockchain or like any technological solution potentially coming in to provide a solution to this shortcoming as well. So I think blockchain and AI are quite synergistic in nature. Both deal with the same assets. They fundamentally deal with data. AI is about extracting value from data. Blockchain is about storing data in a decentralized and transparent way. So combining these into one tech stack is very, like, it feels very natural. Obviously, there come a lot of like difficulties with the actual implementation of this, but that's why there's so much excitement. Like, there's a lot of excitement. It's very early days. People are figuring out these early issues, but the potential is very big. Right?
Yeah. I think for sure, media, social media, all this hype, it does spur this anticipation that things are going to happen very fast. I think, but like you said, the reality is there are limitations because they're still trying to figure it out. I think about, I guess people, I don't know, there were stories of people, learning how to create bombs, right, using AI. And now there's only certain things that you can do, like through ChatGPT and what it can provide you. But I think a lot of different platforms are already integrating AI to increase productivity, which I think is a natural way to go. But I had an interview with this guy, Dr. Duncan Wong. He actually does quantum resistant computing blockchain. And then he's been using AI for code audits. Then I asked him, I said, well, how useful is it really? He says, well, it's still early days. So to your point, there's still limitations. And it goes to go, maybe it's like you said, data will be the big value proposition, because you can have Google out there. Everyone has access to Google, but is that the most valuable information? The valuable information is probably on private chains, right? Or these private language models that potentially you're going to have to pay some license fee to access it. You got to create some separation between this high value data, not just make it available to everyone. Do you agree with that? Do you agree that's how it would go?
It is a very interesting view, and it's a concern I have as well around democratization of AI capabilities, because if it is such a meaningful uplift to productivity, it will, if you aggregate it across, it's mainly impacting like white collar, but even blue collar, all industries. It will have a meaningful impact to GDP if you look at it like across regions, right? The democratization of access to a base level of AI capabilities will become necessary, I think, over the past decade, because you will have such a big increasing gap between the haves and the have-nots that it becomes virtually impossible for the have-nots to catch up in any meaningful ways. I think that's also a big element. And like the company Ruth mentioned earlier, like Exabytes, that they do this on the GPU level, where they are democratizing GPU access through like a decentralized model. But ultimately, that also needs to happen for like specific AI models, specific data sets. Like it needs to be a base level of access to make it a level playing field, I think.
Okay.
And maybe to build on that a little bit as well, I feel like it very much is white space where we are at the moment. A lot of these concepts are still in the academic realms as well. And for builders, there's quite a lot of design decisions of, do they go open source or closed source, and some different, paths that then they can go down. So I feel like being very intentional with what founders are building and where is this going, all of the ethical kind of considerations to bring into it as well, is quite important in this space.
Okay. Well, I want to ask you, Ruth, on your side, when you talk to, or you probably meet a lot of founders, I'm assuming, in what you do. In the past, in my experience, at least, when I've talked to a lot of founders and I look at their pitch decks, many times they will throw in these keywords, right? Like I'm in AI development or blockchain or whatever it may be, right? I guess in your what factors should founders really look at when I'm looking at Web3, the trends? What should they watch, and how should they build their ideas or solutions around what's actually happening in today or in the future?
Yeah, a good question. I mean, I think there's definitely a lot of buzzwords also in the Web3 space, democratization, decentralization. So I think when it comes to the pitches, so we will see a lot of pitches, and some pitches can really stand out. I think a couple of commonalities with the pitches that stand out, and some, tips for founders also, pitching is, I feel like really focusing on what is the problem solving, or in some ways, the problem can be more important actually at the earlier stages than the solution that you're building. Because if
Hmm.
you haven't hooked someone on the why, the need, why are you doing this? Then it's harder to feel the conviction with the solution. So I feel like really starting at that is super important. And yeah, I mean, every company is a little bit different, but looking at also the users. So is it, is the solution that you're building also desirable for users? Are people going to want to use that? So you can kind of segment it, into, I guess, the desirability, feasibility, and the business model viability as well. And kind of those three aspects coming together are some of the things that, definitely kind of look for in the pitch. So I think, to summarize, if you can try and avoid some of the jargon and just be true with what you're really pitching, is key. And what problem are you solving? And I think wrapping that up, if you can, with storytelling. I think information travels under the guise of stories, really. And so the most powerful pitches and founders, describing what they're doing, they can wrap it up. They can have a hook at the beginning of something that captures the audience or the investor's attention. And those are the most memorable pitches as well, when I think back out of all the hundreds of pitches that we see.
Well, I guess so. What you're saying is, instead of leading with buzzwords, you should lead with a solution that has some validation of that a need from somebody, right? So some addressable market, right? And if that's the case, in many of the pitches that you're listening to, and do you think how important it is? You said storytelling is important, but is it just the storytelling, or is it the emotion that elicits, right? So we all know sales, a lot of it is basically, can they move you emotionally? And if they don't, you're not inspired, right? And you're probably like, oh, it's not a very good pitch. So how much does emotion play into the storytelling in pitching?
I think emotion, it plays a part in yeah, definitely in the pitching, and in so much that we do. There's a book I really like. It I can't remember the name off the top of my head, but it talks about word of mouth or kind of getting virality. It's definitely storytelling. It's definitely emotion. When we care, we share. So if it's in kind of social media strategy, all these different things, if you can have some type of emotion that's there, we're more likely to also tell other people about it. It could be positive emotion, something that makes you happy, or something that's funny, or something that's sad, or something that's happening in the world. When we care, we share. So I think that storytelling, finding different triggers as well, that makes you think of it, that makes you share. There's a lot of those things that you can bake it into product design as well, along with your pitch and storytelling.
Okay. Well, I guess going to industry trends or market trends, this is for Jasper. The projects that you look at or you've been researching in RWA space, like how important is it to keep up with Web3 trends? Because I would imagine if you just focus on the problem itself, maybe it's not the trends you need to look at. You just need to look at the available technologies that's going to help whatever solve your problem, right? That's what people are supposed to do. Like, what do you see when they're looking at real world assets? Is it more, is it important to follow the trends, really, or is it because a lot of these trends are could be too early, early to the game?
Yeah, I think like obviously keeping up with trends helps. There's some like it depends on where in the tech stack you're actually looking. I believe that like ultimately you keep up with the trends as like just to know if this is a fitting technology solution for the problem you're tackling. But I think increasingly as Web3 matures, we need to move to a point where like rather than purely selling the tech, we need to start like selling the actual solution. The reason why I believe like this shift is finally happening is because initially, like if you look at the technology 5 years ago, there was a very big difference between, for example, the layer ones. The amount of throughput one could process over the other, or the consensus mechanism one used over the other, was very different. Now, at some point, I feel like a lot of L1s is just like you have a lot of different shading of like capabilities, but all of them have like a baseline functionality, right? So rather than like zooming in on like why it is still very much different, you just obscure that away and then you focus really on like what is the value of the technology I'm building. It is good and useful to stay on top, for example, in RWAs of like for example, you have token standards. You have token standards which standardize the way your smart contracts are structured on like from like a technological level. I think that that's very useful to stay on top of, but I wouldn't advise founders to really dive into rabbit holes of very like innovative tech and then lose sight of the bigger picture. I think you look at what's mature, you have a toolbox of available available technology there, and try to build something with this. A lot of technology is starting to mature. So I think if something groundbreaking shows up, you will probably hear from it without having to spend loads of times like looking at Telegram, looking at Discord. So I think founders can take a step back and focus on their own solution rather than having to spend a lot of time on like the bleeding edge of innovation.
Okay. Well, you talked about the importance of the intangibles like data and IP. Do you believe that these things will be structured in a way to make it, I guess, more valuable or maybe tradable? Is there a model of like using NFTs with RWAs in some way?
Yeah, there's a lot of it is coming together actually. Technically, for example, NFT. I know what you mean by NFTs. Technically, each asset that's tokenized is an NFT, just because the asset is unique and like that's
Mm.
how you would represent it on chain. But a lot of it is coming together. I think also like a lot of token standards are still being developed, right? Like recently we had 404. It is again a unique take of like, okay, your C20s or your fungibles, and then you have your non-fungibles in the 721. How does this look like in combination? And like, for example, 404 is a very interesting example. Like, I think it has a lot of potential implications around liquidity, because that's a big kicker for RWAs, right? Is like putting assets on chain to unlock the ability to have market formation around assets, which previously didn't have these. Like if you look at market formation around assets, these are very much financial assets, and the non-financial assets are assets that have a high intrinsic value. So like your property, your real estate. Market formation around these assets is possible because these assets are so high that the overhead cost associated with market formation is relatively low to the value of the asset. So what I mean by this is if you have like your estate brokers and the entire ecosystem, these are all people who are full-time committed to creating a market around these assets. The overhead cost of this is very high. You couldn't have this around assets that have a low intrinsic value because as a percentage costs to the actual value of the asset, it doesn't make sense. So that's where like blockchain technology comes in. It like through smart contract execution, like the costs just drastically go down, and all of a sudden, like you can form liquid markets. Liquid market formation is very difficult. Even if you look at, like you mentioned earlier, like private assets, VC, private equity, private like individual investments, like just venture deals. Creating liquid markets there, like it's been going on for like I think a decade and a half, where there's like proper commitment to do this, even with blockchain, and I'm yet to see like a seamless solution. Like a lot of people are getting there, I think, but it just shows you that even if the asset is like intrinsically very valuable, it is still very difficult. So solutions like 404 are innovations that can push us forward. And I feel like that's where the interesting stuff comes in. And having these solutions only makes it more valuable to make the decision to go onto blockchain, I think, for a lot of players.
Okay. Yeah, I ask you about the market trends because there's been a growing narrative around projects wanting to start building towards on Bitcoin ecosystem, right? With the ordinals, support of that has launched last year. So now, because Bitcoin is the big player, it's always been the big, most stable crypto in the market. Yeah, what do you think about that? Do people jump at okay, we need to do this now? We need to see how we build on the Bitcoin ecosystem.
Yeah, it's one we called out last year, actually. So I think we published our thesis in September, October, and currently we're in Q1, we're running a Bitcoin cohort. So we have 8 companies on board. I think 8 or 9 companies on board who are building at different layers of the Bitcoin tech stack. So it is a super interesting ecosystem to see because I'm personally I think this is going to go a very long way because some of the I think we see strong similarities between what's currently happening on Bitcoin and what has happened on other chains in the past. Like we drew the straw analogy between Ethereum and smart contracts going online in 15, 16. Subsequently, your ERC-71s unlocking NFT capabilities in 2020, I think, or 21, can't remember from the top of my head. But all this functionality is now coming to Bitcoin, which has just a completely different value proposition. The way, for example, NFTs are minted on Bitcoin, they're truly embedded. The metadata, everything is stored on chain there. For example, with Ethereum, you have pointers to potential centralized database. So the value proposition is different. And if you have a differentiated value proposition, there are use cases that will find it attractive to build on your L1. And also, let's not forget, Bitcoin's a $1 trillion market cap assets. There's plenty of Bitcoin sitting in people's wallets without functionality. It's just sitting there. It's not used in DeFi. It's not used for anything. If you can add functionality in terms of yield farming, even in a very risk-free way, just adding risk-free yield on top of Bitcoin, that's your killer app. You have Bitcoin ETFs, we see the institutional inflow. So adding functionality for Bitcoin is going to be a massive one, I think, this side.
Okay. Well, how about you, Ruth? When you look at supporting the projects in the Accelerator program, how important is it for them to look at the competitive landscape, or how do you support them? What's going on, what tools are being used, and anything like that? Yeah.
Yeah, I feel like for founders to know their competitors, to know potential partners, and really be embedded in the ecosystem is super important. Even when it comes to investor conversations. So it's a common question. That's one of the first questions sometimes that come up, or at least the first 3 of who do you see as your competitors and how are you different to them, or what's your unique value proposition compared to XYZ. So I feel like founders being able to answer those questions is really number one important for product strategy, how to embed and kind of really differentiate what's a unique value proposition compared to others. And then also secondly, be prepared to answer all of those questions when an investor asks you around the pitch as well. So yeah, really important, and definitely see those questions come up a lot. And I think by having a good understanding of your competitors, it means that you're more prepared when there's some key changes in the market. We've had sometimes as an example, there might be a big news announcement about one of their competitors, and then they'll have people asking them, okay, what does this mean for you guys? Is this now, this potential competitor has a massive raise. I'm not so sure if I want to invest in you because how we compete. And if you know what that competitor is building and how you're different, you're more prepared to say, actually, no, we're not competitors. We're potentially more partners, or we're different in XYZ way. So it kind of means that you're already on the front foot and ready for some of those conversations and informing product strategy.
Okay. Well, I think I'm sure a large part of the fundraising that happened in the last, I guess, however few years, when there was a lot of FOMO happening, a lot of VCs coming in to fund projects with no product, no traction, no validation of anything, but they were able to raise money. Many of these have the investors came in looking for a quick exit because there was a token generation event, right? And so they can just be out with a short lock period. But I guess these days, when you're looking at these projects through the accelerator and everyone's looking to formulate some business model to earn some revenue, how do you then support the projects to understand what business models work? And does it really need to be that different? Because sometimes people try to create some, really deep tokenomic system that really doesn't really need to be existing. I mean, how do you help with the business model side of things for the projects in the accelerator?
Yeah, I mean, again, looking at the past year, a lot of the heat has come out of the market. So there might have been, quite a lot of funding going into these projects, and definitely seeing a change in that. Within Outlier, one of the first things we do as well when working with the startups is really assess, do they actually need a token or not? Does it actually just not make sense at all for what they're building? So I think through the base camp, we really have that kind of 360 view when we look at a startup. So we really harp on the product strategy and the tech strategy and the token side of things. And, product and token, if the token does fit, really is quite, good, like it combines. So I think looking at those two in combination is super key rather than, just isolated. So we'll always do that, with the projects that we see. And ultimately having a sustainable business model and does it really make sense for what they're building? That is what will give the project, longevity. That's super key. I think again kind of comes back to those three things as well: economic or business model viability, feasibility, and desirability are, really key elements.
Okay, based on desirability, then, how do most of the projects go out there to see if there is real demand to validate the product? Like what type of, I don't know, top 3 tactics people are using?
Yeah, it's a good question. And in some ways, one of the most important things because it really dictates, firstly, what you even build. So some of the teams that start off from the very beginning. So it might be they're at a hackathon and they go before they might have some kind of vague problem, or they might not. They might just go around and actually just start talking to people and find out, someone is missing this tool. They wish they could do X, Y, Z faster, better, cheaper. So they find the need, and then I think really getting on the ground, speaking to people straight away, and try, whether it's even putting it on a piece of paper and going out on the street and trying to get some validation before you spend a lot of money on actually building a solution. So yeah,
Right.
some of our portfolio companies, it's been hackathons or lots of customer testing.
Great. So I guess when it comes to mainstream adoption, this is for Jasper on real world assets. When I mentioned before, I worked for a license exchange. We've actually put to market a couple of products, and one was actually a bond. Actually, it never went out to market. It got killed. But it was it's a $3 billion bond. It was fractionalized, so then retail customers could come in at a $100 buy-in for some guaranteed interest rate, about 1% for a 3-month maturity date. Usually in this case for banks, when it's offered by them, the minimum buy-in is like 100,000 USD, right? So it made it very attractive, right? It makes it make it available to more people around the world. But it was supported by a bank, a state-owned bank in China, and when they heard that we also sold crypto, they kind of killed the project. But anyways, the whole point I'm bringing this up is that it would have brought a lot of mainstream adoption. I do believe there was actually a lot of interest, even from the local retail banks, that they had people that just went to park their money for 3 months, just some guaranteed interest, very safe. In your research, in your opinions, what do you think is required to gain adoption of real world assets? Does it need to be something that is solving a solution for today, or is it driven more based on financials?
Yeah, I think, for example, in what you mentioned earlier with the tokenization of the bonds, in order for users and retail to really adopt this, I think there just needs to be a strong desire to own the underlying asset in the first place. Because that's a little bit the difficult part, is if you are selling the fact that it's cryptocurrency or digital assets, you're selling to the same people who have been buying your traditional cryptocurrencies, your utility tokens, and it's basically the same crowd, which it's not broad-based adoption at all. In order to find adoption, ideally, the technology which allows people to buy it is completely abstracted away. So people don't necessarily know that it's being traded on blockchain. And then on the same side, from the UX UI perspective, Web3 wallets, which I feel like definitely like from a user perspective over the past 2-3 years, there's been some very good improvements. We're going mobile first. The UX UI is less obscure, like it's becoming user friendly, but there's still some way to go. But those two things need to fall in place. So it needs to become very usable. And also, I think like issuers of the assets need to think about the true desire to own this asset. It is with anything. It shouldn't be because it's on blockchain that all of a sudden like a 1 or 2% yielding fixed income instrument becomes like exponentially more attractive just because that's the way it's represented in your portfolio. It needs to be from the utility of the underlying asset or the financial profile of the underlying assets.
Okay. Well, going back to what you had mentioned, there's like, okay, so if you think about total wallets around the world compared to accounts at brokerage firms, or banks, right? Obviously, it's probably like, I don't know, 1% or less. So mainstream, you're talking about everyone else in the world. And with the introduction now with the Bitcoin ETF, none of those guys will own a wallet. They just go to the brokers. If they want exposure, hey, buy it. And then they're already connected to their online account. It has nothing to do with, do I need to kind of manage a cold wallet or any of that stuff? I mean, do you think that, the wallet, like you mentioned, are they really necessary for the end user?
I think we're basically in flux, right?
I think
we are at the stage where you see it is not a linear path. It is not like, let's go from like non like Web3 to Web3 wallet, and we flick a switch over like overnight or even like a couple of years. It is gradually that because, for example, Web3 is so difficult. It's like the Web3 wallet is not for everyone, but there's still this desire to own Bitcoin. That's like ETFs came into place just through a financial advisor. Very easy, people can take exposure, right? So that's a little bit of the idea of what's currently happening. But if you push that forward and you look at like the underlying trends, what's happening, there are big asset managers, actually a lot of them, who are looking at tokenizing and who are looking at spinning up their own Web3 wallets. You have like the likes of like Franklin Templeton, Wisdom Tree. Wisdom Tree already did this. They tokenized some of their fund offerings and then they issued NFTs which people can have in their Web3 wallet. It's not a bearer asset, as in the NFT representing the funds is not a legal claim to the fund itself. Rather, it's a reflection of the value, but that's a start, right? So it is a start to get people acquainted with the idea of a Web3 wallet. But ultimately, I think, obviously, the private banking wealth management industry is massive. It's only going to grow over time if you look at where banks are currently investing. So from that perspective, I think Bitcoin ETFs are great for adoption, but you're right, it's like the holders will never own their private keys. But underneath, from an asset management perspective, there's still adoption. I think it would be a little bit bullish to say that every asset we will own in the future, like in the short to medium term, will be represented in our Web3 wallets. Like we're still quite some way away from that happening. But it's going to be a combination of both. But I agree, like it is interesting to see like people investing in digital assets and not owning their private keys and just centralized entities basically like becoming a more meaningful player on the cap table of Bitcoin.
Right, great. All right, I'm going to end with one last question, and Ruth, you can start first. So if you were going to look or predict, in the next 12 months, two exciting things that are going to happen in the Web3 space, what would they be? What do you foresee?
Oof, good question. I feel like with predictions, if I had a crystal ball, I would, definitely be a multi-millionaire. I think, looking at, how we're starting 2024, I think there are some positive signs of what's to come. What will remain constant, I hope, is more builders coming into this space, and with a lot of the positive signals that we're seeing, a really good time to be building, and hopefully, a good time to also be kind of fundraising off the back of that. I feel like teams have had a time to really kind of solidify the traction, prove some of those aspects around their business model. So yeah, I hope to see more of the success in the fundraising side going into 2024. And number two is tricky. I think maybe looking at some of the narratives. I mean, definitely like narratives within Web3 really drives quite a lot of the market. Some of the narratives, like we've talked about, today, real world assets, AI, deepen. I think those will probably continue, and actually really excited to see some of the projects that come out of this space, and hopefully joining the Accelerator program. So yeah, very very keen to see what comes over this year for sure.
Jasper?
I think we're at the early innings of a cycle which will be marked by institutional adoption stepping in large driven by RWAs, also in part driven by like the intersection of AI and blockchain. Because a lot of, if you look at the revenue numbers of Nvidia, which came out yesterday, the demand for the product is just crazy. Early implementation there. And I think ultimately, again, they will also come to the realization that like they need to solve some of these issues in order to comply with regulation and stuff. They might look at blockchain, which is a more natural solution than waiting for regulation. So I think we go into a cycle which will be a big one, arguably less volatile than previous cycles, because I think over the next 5 to 10 years, we go from 10 to 90% adoption. This S curve, I think we're about to get off, like the infrastructures which are enough. There's enough mind share. So I'm very excited, honestly. So any builder that's looking to enter the space, I think now is a very opportune time. That's also why we're doing like a lot of these thematic dedicated camps, because like a lot of these narratives are becoming to the point where we can like really provide like very tailored solutions to these specific cohorts. So yeah, institutional adoption, I think, is the big driver behind the next couple of years.
Yeah, I was just talking with my brother the last night, and I was one who got him to buy into some Bitcoin. He actually got into Grayscale a couple of years ago, I believe. But then I just told him, hey, I think you should accumulate more, and I was telling him the reason why. And I said, look, institutions are in now. A lot of the RAs in the US have not even begun selling to retail clients because they're still learning how to sell it, or they're still getting it approved within their organization. And that's only the US. And out here, I'm based out of Hong Kong, there's all this talk. Okay, who's going to launch a Bitcoin ETF out here? Then you look at all the markets and imagine how much money will come in beyond the 1 trillion market cap of today, and what that is going to look like, after some time. And like you said, like with Nvidia, they're gearing up for what's to come. But everyone needs to realize it actually takes time. It is going to be much longer than most people anticipate. And like you said, it's less volatility. But instead of all the speculators in the beginning, I think a lot of them are now out. And now it's more, solid players. Like they're the ones that are really becoming mainstream, maybe waiting on the sidelines, or they're the new users coming in. But all those early adopters, speculators, I kind of think they're not really moving the market anymore. It's now everyone else who will be coming in.
Yeah. And overall, a more healthy environment, I would say, for founders, right? Not having to like stay up all night looking at like where markets are going to move, and just knowing that in 12 months from now, the space will looks like even remotely the same as I think a big one for founders.
Yeah, I think that's so interesting that what you just said too is that of course, many of the speculators are looking on different exchanges or what's happening in the market 24/7, which is very difficult. But the ones that ever since the Bitcoin ETF came out, those only happen during like operating hours around the different jurisdictions. So when you look at the weekend and they're like, hey, why is Bitcoin activity so slow? It's because, obviously, where's the flow coming from? Actually, the markets aren't open to those investors. So actually, it's quite interesting, big shift now that you don't the big movements will happen in the normal market hours, which is actually quite interesting. Actually, it's kind of like the reverse now. Yeah. Well, I want to thank both of you, Ruth and Jasper, for joining the Startup Voyage podcast and providing you insights. And yeah, I'll definitely put your contact information in my video descriptions. Both of you are part, I guess you've got an AI crypto download, Ruth, that I saw that you posted. And then Jasper, you've got your research for the RWA post as well. But thank you again for joining the show.
Awesome.
Thanks, Audrey.
Thanks a
Thanks
lot,
for having
Arthur.
us.
It's been a pleasure to be here.
Hey, so that concludes this episode of the Startup Voyage podcast. I would like to thank all of you for listening to this episode, and I'd really appreciate it if you leave any type of comments that you'd like to share, because it helps to feedback on how I deliver these podcasts.